Hello and welcome to AI Market News by LM. We're diving right in today because a huge psychological barrier in the currency markets has just been shattered. And honestly, it's sending shockwaves everywhere. We're talking about the Japanese yen, and it is an absolute free fall.
And that right there, that is the number everyone is watching. 160. 160 yen to buy a single US dollar. You know, for years, this level was seen as a kind of line in the sand, a point the markets just wouldn't cross. Well, guess what? We just blew right past it.
The move has been incredibly fast, incredibly dramatic. It's pushed the yen to lows we haven't seen in decades, and this massive plunge brings up a really urgent question for anyone watching the global markets.
I mean, think about it for a second. We've got geopolitical tensions flaring up. Oil prices are spiking. This is usually the perfect recipe for investors to rush into the Japanese yen for safety. But this time, the exact opposite is happening. And to get just how weird this is, we have to remember what the yen has always been known for.
The yen has always been in this exclusive club of safe haven assets, right? When the world gets chaotic, money flows to safety, and Japan's currency was always one of the top destinations. But it really feels like the old rulebook is being torn up right in front of us. So, let's get into it. Let's break down what's actually driving this historic collapse.
All right, so why is this all happening? Well, it's not just one thing. It's more like a perfect storm of three really powerful forces all hitting at the same time. We're going to unpack each one.
First up, we've got the massive shock from surging oil prices. Then there's the overwhelming, just raw strength of the US dollar. And finally, we have this huge and still growing gap between interest rates in the US and Japan. Let's start with energy, because that's a big piece of the puzzle. These two charts, side by side, they tell you almost everything you need to know. This is the yen's Achilles heel, right here. See, Japan imports a ton of its energy, especially from the Middle East. So when conflicts cause oil prices to just skyrocket, that's the red line on the left, Japan has no choice but to sell huge amounts of its own currency, the yen, to buy that now much more expensive oil. And the result? You see it on the right. The yen's value just plummets. The market's logic has become brutally simple. When oil is high, the yen is weak.
And that brings us right to our second point. During this particular crisis, the old safe haven playbook has just been tossed out the window. Instead of spreading their money around to different safe assets, investors are making one clear choice: the US dollar. A huge reason for this is that oil is priced in dollars. So when energy costs go up, demand for those greenbacks goes up right along with them. Plus, the US is now a major energy producer itself, which makes it way more protected from these price shocks than a huge importer like Japan.
And finally, there's the Great Divide. This simple chart shows the absolute core of the issue. While the US Federal Reserve has been keeping interest rates high to fight inflation, the Bank of Japan has basically kept its rates near zero. Now, global money, it's like water. It always flows to where it can get the highest return. And right now, that means it's flowing out of the low-yielding yen and into the high-yielding dollar. That just adds massive downward pressure.
So, okay, the yen is getting hammered from all sides. We get that. But breaking through 160 is a really big deal because it's a level that has actually forced the Japanese government to step in and act in the past.
Just look at this chart. These are the battle scars from previous currency wars. You see those sharp, almost vertical spikes? Those are the exact moments the Bank of Japan stormed into the market, spending billions and billions of dollars to buy up yen and defend its value. And the crucial part? A lot of those battles were fought right around this 160 level that we're at today.
So, this is the multi-trillion-dollar question on everyone's mind, right? Is history about to repeat itself? Are we about to see another massive government intervention? The pressure is definitely building. So, what are the key things we need to be watching for next?
Okay, so what happens now? There are a few really critical events coming up that could either pour gasoline on this fire or maybe, just maybe, provide a little relief. Let's take a look at the upcoming economic calendar with data from investing.com. Two events really jump out. First, Japan's trade balance numbers are due out tonight. And with energy costs so high, a really bad number there could easily send the yen even lower. Second, we'll be listening closely to any comments from major central bankers, like the ECB's president. Anything they say about global interest rate policy is going to be important.
So it all boils down to this huge tug of war. On one side, you have the threat of intervention, or maybe a sudden drop in oil prices that could cause the yen to snap back hard. But on the other side, you've got these incredibly powerful forces, the interest rate gap, the dollar's dominance, that just keep pulling it down. The market is truly at a crossroads right now.
When you step back, what this crisis is really doing is forcing all of us to question some very old assumptions. As this quote suggests, the very definition of what makes a safe haven might actually be changing. The yen's huge vulnerability to energy prices has been totally exposed, and the market is definitely taking notice.
And that really leaves us with one final, crucial question to think about. If the yen is no longer that reliable shelter it used to be, where is all that global money going to run and hide in the next big crisis? That's a huge question for all of us to consider. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.